Since the 2008-2009 global financial crisis, the credibility of ratings issued by credit rating agencies has diminished due in part to their opaque methodologies, lack of accountability, and conflict of interest. The NUS CRI PD model was introduced to provide a meaningful counterbalance to the existing for-profit business model of CRAs. In its essence, it measures the likelihood that an obliger is unable to meet its financial obligations. CRI uses big data analytics to produce a reliable, transparent, and independent assessment of credit risk. Our forward intensity model produces forward-looking PD term structures of publicly listed firms based on dynamic learning from macro-financial and firm-specific data. With our parameters regularly calibrated by observed defaults for each region, CRI model delivers accurate performance across the globe, allowing for a granular, data-driven, and up-to-date distinction between safe and risky firms. Our data is produced using a fully transparent and regularly updated methodology, utilizing the latest research in measuring credit risk to produce highly informative PD data. NUS CRI produces daily updated probability of default data for over 80,000 publicly listed firms in 133 different economies around the world, with a prediction horizon from 1 month to 5 years. CRI has produced a plethora of PD-derived products to enhance analytical capabilities for our clients and users. Not only are users able to aggregate individual firms' PD values by industry, economy, and region to measure their overall credit risk, but can also utilize other measures such as CVI and CRI SIFI. CAVI allows the users to aggregate individual PDs using different indices, giving them the ability to gauge risk from a broader perspective, while CRISIFI measures systemic risk for exchange-listed banks and insurers around the world, using rankings to give a quantitative measure of systemically important financial institutions. Another flagship product, jointly created by NUS CRI and the International Monetary Fund, is the Bottom-Up Default Analysis, or BUDA toolkit, which helps users stress test PD values against more than 3,000 potential stress variables. With a growing demand for practical models to analyze the dynamics of credit risk under different macroeconomic scenarios, the BUDA toolkit provides an easy-to-use and interactive platform to measure the sensitivity of credit risks to shock in the economy. Our products are trusted by organizations around the world for regulatory compliance and detecting early warning signals of potential crisis. Given the versatile and granular applications of the PD model, it isn't surprising that institutions from a diverse set of industries utilize our PD-related models. For example, regulators and policymakers utilize our products to create more informed policy decisions through data-driven credit risk measures for their economies. World-renowned international financial institutions also use our BUDA platform to perform stress tests and scenario analysis based on their economic forecasts. Lenders and investors can utilize our products to strengthen credit evaluation and to enhance their internal risk management systems as part of their lending or investment processes. Under the new umbrella of the AIDF family, NUS CRI becomes empowered with further cutting-edge enhancements. Not only does the project benefit from access to state-of-the-art technology utilized by AIDF, but also from cross-discipline expertise that enhances the corporate default prediction system. This includes the incorporation of alternative data collected from digital media about credit-focused sentiment driven by natural language processing, and the development of a federated learning system for SME credit analysis.